I've gone through the last 100 property investments that our clients have made to work out where is everyone buying. In this video, I'm going to release all the buyer's agent's secrets to you and share with you exactly how to find the areas where everyone else is looking before they do, so you can do it all yourself with the benefit of a computer, 10 minutes on a screen, and 1 subscription. And then I'm going to deep dive and go into how to assess each of these markets. Specifically, I'm going to release 3 areas that all the buyer's agents are buying in right now and tell you why they're booming and go through the data so you can understand it. You can follow the exact same formula, pick any suburb you want by the end of it, and you'll be able to assess a property market better than the rest by the end of this video. Let's go. There's a new trend with property investing today. The data-driven mentality is forcing people to buy the same thing. These are the metrics that they're looking for. Everyone is looking for areas where demand outstrips supply, and when you have that combination, you have prices rising. Now, with the power and influence of larger and larger buyer's agents and data-driven people, what more and more people are doing is shifting their property strategies to target these areas specifically, because there is now an overweighting on short-term price growth versus long-term price growth and long-term trajectories with housing. So if this is where everyone is targeting, it doesn't necessarily mean you should do so, or it's the best place to go and invest, but it does probably highlight an area that's going to do very well in the next 12 to 24 months, where prices are a little bit below where they should be. But that doesn't necessarily mean it's going to do well over 5 years. The price in these areas could shoot up and then come crashing back down. They're more likely to do it because these data-driven people are buying in regional areas, much smaller population centers, much smaller economies, and much less diverse versus the bigger capitals, which can create volatility over time. So bear that in mind. I am not endorsing these 3 locations. I'm sharing them with you and sharing with you how to go and do it. So this is the tool that you can do to summarize it all. Jump on this website. It's called dsrdata.com.au. It is a subscription tool. You'll need to go purchase it to get access to the full data set. What this does is it analyzes all the data factors that has the demand and supply, and that analysis spits out a simple number for you so you can digest it, analyze 15,000 suburbs, do it all from your computer in 5 minutes. There's people who charge thousands of dollars for this, buyers agents, etc. They're just using this data tool. So you can skip the middleman if you want to. If you don't want the service and you just want to know where to buy, just get on this data tool and you can get that information yourself. This is all pretty well known. There's another one as well, higher than average growth. I love this data tool and we'll be using that as well in the analysis because it's a bit deeper and I like looking into that to get a bit of a wider context. Okay, so you jump on this website and you go onto Market Matcher. You'll need to get a subscription for this to go and do so. So I've gone through, I want to look across all of Australia, look through all 15,000 suburbs. I'm looking at houses only, mainly because so many people look at houses only. So all of the 100 property purchases that we've looked at, pretty much all of them are houses. There's a couple townhouses in there as well more recently, but let's just put houses. These are the metrics that you want to use. You can summarize it. You can put in all these data metrics if you want to, or you can just quickly summarize it and click demand to supply ratio plus. This is a weird data tool, but it really gives it a score for you. It scores every single suburb in Australia with one metric that sees where demand outstrips supply. Now you can put in all the metrics if you want to, put in 10, 20, 30. Look, I'll just quickly show you. There's a whole range of them. Auction clearance rates, average vendor discounting, days on market, long-term growth, market cycle timing, median growth, neighbor price balancing, online search interest, blah, 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 blah. Or you can just skip to the end being like, look, can you just summarize it for me? Give me the answer. Make it simple for me. I don't really want to watch YouTube video after YouTube video. I don't really want to go through these steps. I just want the answer. Give me the answer. Or as Jerry Maguire said, show me the money. That is how you do this. Just jump on this tool, go on demand and supply ratio. I put in 60 here, which pretty much just feeds out the rest and gives me the best. Be like, hey, what's doing the best? Put in gross rental yield, typical value. You know, you might want to put in your budget here. I put 400 to 800,000 because that's really the majority. About 90 of the 100 transactions in between this, and another 6 of them are at 900,000, between 800 and 900,000. So the broad majority of investment activity is in the sub $1 million category. I did strip out Sydney. We obviously represent a lot of Sydney investors buying specific Sydney properties. I did strip that out and looked at our specific transactions from property investors this year to come up with this and to check if this works. Display sorting criteria that you can adjust, and then go show matching markets. Okay, so here I have is 40 suburbs pop out. These 40 suburbs are pretty much where all the buyers agents are buying and all the data-driven people looking at today. It's probably exaggerating a little bit, but summarizing it up, you get up that north coast of Queensland, you have Mackay, you have Townsville, and you have everything in between. You've got Rockhampton in there, and you can go all the way up to Cairns as well in terms of some of these suburbs that are doing really well. So let's deep dive and analyze these locations. Let's go through some of the detail here. So these postcodes, 4740, 4700, 4812, 4818, all the way down to 4870. This is all that Queensland pocket that we talked about, the upper north part of Queensland. It is the area of Australia that is doing extremely well in terms of demand and supply. There are not enough homes for sale. There is a lot of demand. And this breaks it down into very specific suburbs. You can go down region. We've done regional analysis to just break it down rather than going through suburb by suburb. You can see some of the demand to supply ratio scores here. Check out this suburb, Oralee. It's got a 64 score and a really low vacancy rate, really high gross rental yield. There's going to be a lot of people buying in here or looking at it at least, because it does spit out amazing, amazing data. Then you've got a number of WA suburbs as well, and we'll go review one of these WA locations, particularly the last one here, because it is an area where people are looking. They call it Daly Loop here, but that's otherwise known as Bunbury. This is a suburb near Bunbury, and Bunbury is the bigger location in and around it. So those are the 3 areas that we're going to be analysing. I didn't release it until now. We're going to be looking at Townsville, we're going to be looking at Mackay, and we're going to be looking at Bunbury. I wanted to get a broad width of Australia, look at exactly where people are buying, and this pretty much encapsulates it and goes through the data. So let's go through how we do it. Now that I've shown you exactly how to find these areas, let's go through the deeper research that you need to do about these areas before looking and why they are dominating the trends here. Let's start off with Townsville, one of the golden childs of northern Queensland, doing exceptionally well. We talked about it in a couple of our podcasts as well with Kurt, where we talk through where people are buying and why. Here's some of the data here. House prices are on the up. Weekly asking property prices are rising. There's been a 22% increase in the last year alone, and it's been rising for longer than that as well. But it looks like it may not be fully through its cycle. This is positive and encouraging. I'd like to see, I see a lot of price growth here, but nothing extraordinary that just blows my mind, be like, hey, it's too late. I don't think it's too late in these areas. I do think you're going to be buying after more than half of the gains. It's risky, but I do think property prices will continue to rise. Demand is outstripping supply. Rents are going up. This is what you want to see. You want to see price pressures not only in the housing purchase market, you also want to see it in the rental market. You've got that here too, with rents rising dramatically in postcode 4810. The yields are still pretty impressive. You get that in the DSR data as well. You can buy with very strong yields in these areas, which is why people are being attracted to it. You can get 5-6% in these areas. Those that are purchasing in trusts, for example, there's a lot of property investors that we are working with that purchase in trusts. You typically want higher yields so you can keep recycling your borrowing power. Townsville is a good location for that strategy specifically. Vacancy rates are down from 5% in 2018 to 1.7%. The main reason why Townsville is amazing, this is the story. It's actually not in any of this data. I hope people can find this. I hope people do the research and get to this. Definitely the buyers agents would have done this. I'm sure they're sophisticated enough to do this. But Townsville had a double-digit unemployment rate. Double-digit. It started with 10 something. So many people were unemployed a long time ago. This is not that unusual for smaller regional areas where unemployment can have some volatility associated with it. But then it came down to 2.2% about 18 months ago, and now it's back up to around 3% today. So it has risen. It's risen materially from a year ago. It's 3.7% today, I think, but it's still very low and much lower than that 10% figure wow, that it was a long time ago, but it does show that complete change in employment cycles, and that complete change has driven this property demand, and that's why property prices are rising. So many more people are in jobs, the economy is doing much better. There's not enough homes, the vacancy rate's really, really low, from 5% down to 1.7%. You'd expect to see that. Townsville's a location. I don't know the specifics of this because I've never looked to buy a house in Townsville, but you need to do your research with suburb-specific things. This video is not about buying in Townsville, it's just showing you where other people are buying. If I was buying in Townsville, I would probably get a Townsville-specific buyer's agent to help me purchase something there, or do a lot of research into the specific areas to look at, and be mindful of insurance costs as well, because that is a bit of a dangerous thing. Days on market. Look at this trend. This is what you want to see. Houses selling quicker and quicker and quicker. And everyone we speak to, the information we congregate with Curtis and I, he asked him, like, what are the conversations like with customers? And they all tell us it is so hard to buy right now in Townsville. It's tricky. Once you get something under contract, you keep it under contract. So you can see days on market coming down and vendor discounting also coming down. Stock on market doesn't exist. There's nothing for sale there. You have to buy off market. Makes sense. It's because big buyers agents are buying the entire suburb. They're calling the real estate agents, be like, anything you have, show me first, I'll buy it. So there's going to be no stock on market because there's a wave of off-market properties being bought by big buyers agents, so nothing hits the market. So if you're buying something on the market, buyers agents probably already looked at it, said no to it. That's one of the downsides of trying to buy in these extra hot markets where there's big companies already there. They would have taken a lot of the stock. They'd be overpaying for it. It doesn't really matter. They're just buying it. They want transactions done. They're buying the data. They're buying the ship moving in the right direction, and it can be hard to find homes. So days on market, stock on market, really, really low. Total listings down. Vacancy rates really low as well. Got building approvals here, another data set that you want to see. Are homes being built? Approvals trending downwards. There has been a recent increase though, so that's something to be mindful of and see. This trend does trend down, but it looks like it's trending up from 2023 onwards, so that's something to be mindful of and something to look at. Townsville affordability, it takes 30 years to buy a home, so that affordability has now moved from an affordable market to becoming slightly unaffordable. That's something to be mindful of as well. Townsville, it is a market where many people are buying, many people have reviewed it. It's no secret. This is not a secret. You can watch any other YouTube video, any short, you'll find other people talking about Townsville right now. A lot of people are talking about it. I'm talking about it to reveal to you exactly how to look at it. Next, we go through Mackay, which is a very, very similar story. So I'm going to wrap through it really, really quickly. Massive price growth recently, up 27%. Big rental increase, 15% in the last year. Yields coming down a little bit, which is what you'd expect, but still pretty strong. Low vacancy rates, no homes for sale. Again, very, very, very low vacancy. Wow, look at that drop. Vacancies up near 10% in Mackay. Oh, yikes. So this is a little bit scary. I personally am a little bit afraid of investing in areas that can get 10% vacancies ever. That 10% of homes that are there are just left vacant. It's kind of like owning an office in 2020 in Mascot, or in the city, in a time where everyone's working from home. It's a bit like that. It's a sort of area that people just don't want at all. That's what this data says. At some point between 2014, 15, 16, 17, 20, 18, nobody wanted a home. They just like sit there vacant. That's a problem for property investors. It's so scary. If you own a property investment with a mortgage and nobody wants to rent it, you're going to have to keep discounting your rent again to simply get someone, and you might not even be able to get someone. That's what that vacancy rate says, 10%. That's really, really scary. That's a really, really high number. Right now, 0.5%. It's the complete opposite. Now it's like, I really want a home. I really need a home. Really kind of sucks if you're a tenant in Mackay trying to find a home. You probably wish it was back to 2015, being like, it's quite easy to find a home then. What's going on now? Days on market coming down as well. Really, really strong. Don't know why it's at 52 days. That sounds like a long time to sell a home, but that's really not happening on the ground. Mackay, very, very hard to buy a home. One thing for property investors to be mindful of is, again, I know this from speaking to many of them. Some of them are good friends of mine. One quote that I've heard is, I go in and buy the entire suburb. You know why? Because I'm me. We're like, yeah, you heard that right. I've heard that before. And they're like, wait, what do you mean you buy the entire suburb? I'm just like, I'll take it all, anything, it's mine. Be like, whoa, you could do that? Be like, yeah, you can. When you're that big, you can be like, I'll take it. It's a bit weird, you know, anyone who watches rap videos is like, all the honey's for me, all the honey's for me. That's a bit creepy, but that's kind of what they're doing. They're being like, anything is mine. And because of that attitude, it can be hard to buy. And when something goes into the marketplace, being like, oh, might mean that they've said no. A lot of people have said no. So you might be buying kind of the rubbish stock that nobody wants, and it could be rubbish for a reason. So be very, very careful when you're purchasing. Do your property due diligence, not just your suburb due diligence here. You're competing for properties that people have already said no to, most likely, and there's a lot of people there. So you may need to build those relationships and work very hard to simply get access to a property investment in these locations. Or just call them and buy one of them. Like, that also works. Stock on market coming down as well. Building approvals. Whoa, what am I looking at here? Yikes. This one scares me. Building approvals. It's just like, it's up. It's like a tower. That's what I see. I just see a city building like going up. So it's such a small area that, like, you know, we're talking about approvals at 70. It's gone from 30 to 70. We're talking about a really, really small location here. So I don't really know what to read into this other than for more homes are coming online, which is kind of what you'd expect when prices rise. Affordability, 26 years to own a home. So it's still pretty affordable in Mackay despite all this price growth. Again, unemployment trending down. Mackay region about 3.6%. Youth unemployment has ticked up a little bit, but pretty good. Mackay, much more of a mining sector, which is what I would have expected as well, because of that volatility in that huge vacancy that they had. You have that in mining sector economies, but it is a bit more diverse in the energy sector as well. There is some other work happening there, but mining does dominate the area there. So be mindful of it. People are buying in Mackay, Rockhampton, Gladstone, Townsville, Cairns even, that entire pocket, northern Queensland doing really, really well. You can do your own due diligence to work out if you want to buy this type of strategy, which particular location you want to be buying at. Rockhampton is another one. I thought about doing Rockhampton instead of Mackay, but I picked Mackay. If I was doing 5, I would have done Rockhampton, so just bear that in mind. Rockhampton's another one to look at. Let's flip over to the other side of the country. Let's go that way. Thousands of miles, like a 10-hour plane ride, like pretty much to the other side of the world, but it's still inside Australia. You now get to Bunbury, a location that I've never been in either. It's down south of Perth, so you can pick any Perth location. If you go back to the DSR thing here, let me check. There's a whole bunch of postcodes. So I've got 6021, 6054, 6056, 6058, 6060, 6061, 6062. So, you know, you could pick anything around 6060 as well, because there's a whole range of postcodes there that do pop out. Let me just quickly go into this, which will be in the middle north part of Perth. But everyone knows Perth is going on a tear at the moment. So I've picked Bunbury because it's a regional location and I've seen a few contracts in this location as well. So let's go into the detail here. Again, really, really low vacancy rate. Asking prices have shot up a lot. Weekly rents have shot up. Yield is coming down. Similar story. Vacancy rate, whoa, again. Another area, around 6-7%, down all the way down to 0.8%. Look at that drop in the vacancy rate. It's huge. Days on market coming down dramatically. Can't buy a house there. Stock on market coming down. Building approvals pretty low, increasing, but being pretty low. And it's extremely unaffordable now relative to incomes. Employment markets, again, big change here. What you can see is really the same story. It's consistent across any of these locations. Anywhere where the DSR ratio is positive, you're going to see the same thing. You're going to see days on market coming down, vendor discounting coming down. You're going to see too much demand in the housing sector. You're going to see not enough supply. That's what it's measuring. So, you know, when you dig into what it's measuring, you go into the detail, you can see all of that. That is in the data here. And it's being driven by economic performance and economic change. You can see it in the employment markets that happened beforehand. That's driving markets to improve in these areas. So here's a little bit of deep dive into 3 regional locations that other people are buying at. Something for you to consider and potentially an area for you to buy in. If it was me, if I wind back the clock 10 years, and make myself a 22-year-old, 23, 24-year-old with very limited capital, and I need to make some money quickly. I would be doing my homework on some of these locations. I'm not so sure I'd be buying in any of these particular locations, but I would be doing my homework here, being like, I need to make money really, really quickly. I may consider purchasing the right type of property if I can find a good deal and do the legwork. There's going to be a lot of legwork here. I may consider it with the expectation that I do pretty well over the next 12 months. But I think the risk reward framework is a little bit questionable. Even though you're going to get price growth, I think you're going to be paying for that price growth. So for example, if you're buying a property for $500,000, the data for that property is probably at $450,000, but you're paying $500,000. And over the next 6-12 months, that price growth is going to show a 20% price increase, 2 or 3% every month. That doesn't mean because you bought in this month for $500,000, your house is now worth $600,000. I think you are paying the price growth for the next 12 months ahead. To get your hands onto something, you're going to have to overpay for it. And it's a little bit dangerous. The volatility does scare me a little bit. But when you're young, you don't have much capital and you need to take on risks, this may be a pretty good risk to take on to accelerate your capital journey. That's probably the type of strategy I'd look at for some of these locations. So something I wouldn't rule out, a lot of our savvy investors are buying here. A lot of the best buyers agents in Australia are buying in these locations. So I wouldn't rule it out, but I'd be going in pretty careful and doing a lot of due diligence on the particular suburb to go and look at. And it's good to see that these areas are going to do so well. That is an opportunity for you, and the buyers agents have got it right. All the data matches. If you found this video interesting and you want me to do more suburb analysis of other regional areas or other areas that people are buying, or if you want something completely different, if you want me to look at areas that aren't doing so well, that I think may do well, I can even go through the data and dig through early boom indicators and look at other locations that could be the next Townsville, could be the next Rockhampton, could be the next Mackay, could be the next Bunbury. We have the means and the ability to do that. It's not that hard. You've got to follow the data breadcrumbs rather than just looking at demand and supply. We'll be looking at economic activity and tracking different things for that. If you want me to do that homework, I'll do it. Drop it in the comments below. Let me know what you want me to look at, or if you want me to look at a specific market that you're in or that you're thinking about and want to know why or what I think about it. Happy to do that work too. If you found this video useful, hit that subscribe button, hit that like button, and I'd love it if you could help support me on my journey to produce really insightful property content for you all.